Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Chad Griffiths with us. Chad is an industrial real estate pro, and I am super excited to have him on because we don't talk about industrial a lot. And so this is going to be a new topic for us. So Chad, thank you very much for hopping on.
Yeah, my pleasure. Thanks so much for having me on.
All right. And I gotta apologize to everybody who's listening. I do have I got bronchitis a few weeks ago, so I might have a cough here or there, but I'll try to keep them in. Speaking of,
right on cue.
AM. All right, Chad, I told you before we hopped on, we like to start with stories. Stories are always the meatiest part and the most interesting. So why don't you take us to yours? I'm sure you got a good one. Industrial is a very niche market. So tell us your story. How'd you get into real estate?
Yeah, it actually started when I was younger, and I bought and sold a few houses with some friends, and we got the itch to do more. And I really liked real estate. We weren't very successful at the time. We were just young kids, and we were using whatever money we had to try and get it to work, and we just couldn't profit off of it. But I still had the real estate itch, decided to get my license. I did a year of residential real estate and just didn't see a future for me being in that long term. So I reached out to a few friends, wanted to get into the commercial real estate space, got a offer at one of the brokerages in 2005. And I've actually been at that same company ever since. But I thought I'd be working in commercial real estate. I thought like the glamorous aspect, like an office tower or a shopping center.
Donald Trump kind of stuff.
Yeah, exactly. I wanted to be Donald Trump, maybe without the hair
Right,
and everything, all the other baggage that he has. But I was a fan of Donald Trump. I was thinking office skyscrapers. Our office, though, just happened to be primarily involved in industrial real estate. So it was almost by pure accident that I joined an office that was focused on industrial real estate. All the agents were working in that. So I just stumbled into it. And that was 2005. And so fast forward 17 years, partner at the firm now. And then in 2014, I also started investing in it myself. So with a partner, we bought a single industrial condo for about $400,000. And then we've pretty much added a property every year since. We closed on one in January, was 6 months ago, which was about $3.5 million. So we've scaled up our portfolio from that first one of that kind of $400,000 one to now we've got about a portfolio of about 18 million. And we've got a few partners in there, and obviously a lot of debt on that as well. But kind of our goal and our vision is just keep adding properties, one a year if we can do it.
Yeah, man. One step at a time. That's the best way to do real estate. I love it. So I got a few questions. I mean, it sounds like you first got started with your friends way back when, and you just said like how'd you guys get started in the first place? It sounds like you just were going out there. Were you doing wholesaling, or were you guys brokers at that point? Or
no,
what
we would look for really cheap houses. So almost
Flipping
like
them?
inner
Yeah.
city houses, and try to flip them. Or if we could, we'd try to put tenants in there, hope that you can, I think the traditional goal of a real estate investor is hopefully you can get some appreciation, hopefully you can get some pay down, hopefully you can get some cash flow. And we failed at all three of those. So it was just, we didn't lose money, but we put in a ton of effort trying to flip these. And at the end of the day, if you have nothing to show for it, that's a lot of work that can go into it. So yeah, it was, I saw the opportunity, but when we were all in our early 20s, and we were using all the money that we had and all the time that we had to try and put into it. And it's just, we couldn't make heads or tails of it. So it was a learning experience, but ultimately a failure.
That is a very familiar story. One of the first flips that I did was with a buddy of mine. And this was literally one of the first deals that I had. And we did most of the work. Like we laid tile, we did the demo, we did all this stuff. We shouldn't have been doing it because we were not good contractors, but we did all the work, and we worked on it for, I think, took 9 months to do this flip. And we ended up each with $16,000. And after that much work, we were just like, fuck this. This is horrible. We do not want to do this again. But
that's the fact that you made 16 grand though, that we would have been ecstatic if we made 16 grand.
I love it. Right on. So you started with friends, but it wasn't your cup of tea. You tried brokerage. You didn't like resi. Why didn't you like being a residential broker?
There's people that do enjoy it, and so I don't want to denigrate it and make it seem like it's not a great industry. I think that there's some awesome residential agents out there. I just hated the evenings and weekends and always being at somebody's beck and call. And when I was younger, I was like, I can do this for sure, but I just start trying to extrapolate out the future trajectory and see, well, you're going to have kids and you're going to have a family and you're going to want to have your evenings back. And I didn't see a path forward where I'd be happy in that career for the long term. Whereas some of the people that I knew in commercial real estate, they're working mostly business hours and they're not at having to drop everything to go do a tour at 9:00 at night. And just that sexy element too of it, right? And again, this was before industrial, which is like a pretty opposite of like a sexy trophy
it's the unsexy ones that are the best in my opinion.
and I'm very grateful that I found my way into that, but that was the main reason, is just I didn't want to be doing those evenings and weekends and on everybody. You have to drop everything if somebody calls and wants to look at a house because it might be sold the next day. So that I didn't want to do that long term.
Yeah, no, that makes sense to me. You mentioned industrial condo. What is that? That is a new term for me.
Yeah, and terminology will vary, but it's no different than like an apartment condo or a building. For the easiest way of putting it, and I'm sure this isn't in every market, it could be an apartment building where they're all just individually titled units in there. Like I've heard terms like strata and like a condo, like for residential, but it'd be a full building where each individual owner owns just their unit, and then they might have like a unit factor in there where they own a portion of all the common area space. Exact same concept exists in other asset classes, industrial being one, where the condo that we bought, it was part of a larger building. It's about 40,000 square feet total, and we just owned the legal unit that was in there, and it was about 2,000 square feet. But that provided us the ability to get into a property, an industrial property, which we really wanted to dip our toe into. And for a number of reasons. We wanted to show that we could properly manage an asset, start building your portfolio, getting your name out there. So we wanted to do that. And what a lot of people think with industrial, and this has just been common that I've noticed talking to a number of people over the years, is that they think industrial means that you're spending $10 million on a big warehouse that's leased to FedEx. And while that's definitely an opportunity for people, there's also all the way down to like a $400,000 condo like we bought for our first property. So I that's one thing that I like dispelling, is that notion that industrial has to be these big assets. You can buy smaller and inexpensive ones just as easy. Yeah,
for sure. Well, let's take that cue. Let's dive deeper into industrial. This is, it's an asset class that I don't know a ton about. It has similarities with self-storage, which is my focus, but it's obviously not even the same. So why don't you just talk industrial to me? What's the first question we can get into? I guess what I like to learn about first when I hear about new assets is just what are the pros of the asset class? Like why would you sell an industrial, how would you sell an industrial property to me as an investor?
I think the first thing that I would say is that I wouldn't necessarily try to sell anyone on it, because I think that there are a lot of disadvantages with it. And that probably sounds contrary for me coming on talking about industrial real estate, essentially saying that it should scare people. But I think that that's an inherent obstacle to investing in industrial real estate, is the fact that a lot of people don't want to do it. Either they don't know enough about it, or they're not confident in it, or they think that there's too much risk that comes with it. There's a lot less people that want to do it. And I think that that's a good thing, because I kind of subscribe to Warren Buffett's theory on investing is never lose money. Well, if you don't know what you're doing in the industrial space, you run the high risk of losing money. And that was no different than when we were investing in residential. We just didn't know it well enough and we lost money on it. But if somebody was committed to looking at industrial and they wanted to diversify, or they saw it as an asset class that had a long runway ahead of it, which I believe it does, there are a few reasons that I think industrial can make a lot of sense. And that's why I've put all my eggs in the basket. Is the first is that for the most part, your leases are going to be a lot longer than what you'd see in like self-storage or residential.
You're talking like 5-year, 10-year leases.
Yeah. Like it's not uncommon to see a 5, 10, 15-year lease. So if just from the standpoint of having that confidence that you're going to have a tenant in there, it's not a resident, it's going to be a business. So you can look under the hood to see how strong that business is, what the likelihood of them being able to support their lease payments for the foreseeable future. And you don't have that chronic turnover. With that also comes a lot of management upside. And just from the standpoint of being able to scale, I think industrial affords an investor much more ability to scale easily. And an example is one property that we bought 2 years ago. It's a $3 million property that has a Fortune 1000 tenant in it. It's a single tenant. And if you were to spend, well, you're in Seattle, so your market's pretty crazy, but let's say an average multifamily building, if you're to spend $3 million, you'd get 15, 20 tenants in there, give or take, just using kind of a round number. And the management required to manage 15 to 20 residential tenants is considerably more than managing one industrial tenant, which takes care of everything anyways. I haven't even been to that property in the past over a year. I haven't even been at that property, because they take care of anything that comes up. And if something comes up that they can't take care of, we just have a maintenance guy go out to do it. So that's a very easy property to manage. And I can scale, I can add 5 of those properties without having to take on a considerable amount of property management and operations, and just like to me, having to manage 100 residential tenants versus managing 5 to 10 industrial tenants that turn over once every 5 years versus those residential that turn over every year. That I think that just the ability to scale is very appealing. Those would be probably the main reasons that I would say is just ease of management. You got longer term tenants, even related in that, I guess, would just and an important aside is just how most leases are structured. So most commercial and industrial specifically are structured what's called triple net. And that means that tenants will pay one amount to the landlord, usually called the base rent or the net rent. Plus the tenants pay for all the operating level expenses of the building, including any increases. So the lease will be structured. Tenant pays one amount as their base rent. Then they also pay either the full amount if it's a single tenant building, or they pay their proportionate share of all the operating level expenses, such as property taxes, building insurance,
utilities, blah, blah, blah.
All of that. So the tenants pay that, but it also is written right in the lease that they pay for any increases in those expenses. So I think that that's really an important distinction between like a residential lease, which is probably structured as a gross lease. So they might pay utilities over and above it, but if they're paying $1,000 a month, that includes the property owner's property taxes, the insurance, the condo fees. That's going to include all of that. Whereas in commercial, they pay all of that separate. So it helps from having that amount be eroded by increases, and property taxes always seem to be going up. We're in an inflationary environment. If you only have a gross lease right now, all these increases are eroding your profit essentially. Whereas in a commercial and industrial lease, those increases, while they're ultimately borne by the tenant, and I'm sure that they complain about it, that doesn't affect the amount of base rent that I get as an investor. So all that being said, I still do want to frame that by saying it is very appealing, but I think I always like putting it on a pendulum. I think that there's a lot of upside potential for industrial, but when that pendulum can swing far on the upside, that also means it can swing far on the downside. And the last thing I'd want to do is paint this as being a very rosy picture where I do believe it's a great opportunity. It also does come with a corresponding amount of risk. And I think any new investor should just be very careful on how they take on that risk.
Yeah. And the risk, I mean, in my mind, the risk being, especially for the larger facilities, the tenant base is a lot smaller. You're talking multifamily. You can go to any family out there can rent this. When you're talking, 100,000 square feet of industrial space, there are fewer businesses out there that are, have the economy to actually rent that from you. And so it's smaller tenant base. When your one tenant leaves, you're shit out of luck. You're not getting any income. And now you've got to rush to fill that. Does that sound like what the risk kind of involves there?
Absolutely. And I could even give a specific example is imagine somebody goes and buys a property in a warehouse property. Say they just spend $5 million on it and they've got a tenant in there for 5 years. And after that tenant, 5 years comes up, let's say that tenant decides they're not going to renew. Well, what is the market for that property? Perhaps it was specifically built for that company that was in there, and it's going to require a significant amount of money to retrofit it or to fix some of the problems that it might have to get that next tenant in there. And like you said, you now just lost 100% of your income. And property, by its very nature, is valued as some function of the rent that's coming in there. So if you have to now perhaps lease it for less than the previous tenant was paying, now the value of your property has just gone down from the sole reason that multiple of what the income is has gone down as well. So there's huge risk, and I've seen very smart people being involved in industrial real estate where that scenario has happened, and they've had to watch a lot of money go away just for that exact same reason. They had a tenant in there. The tenant left for whatever reason. They didn't renew, or they went, perhaps they went bankrupt. Any number of things can cause a tenant to leave a building. And if you don't know what the market is for that building for the next tenant, then a lot of money can evaporate very quickly.
Yeah. And especially I bet it's very market dependent, because there are markets that just turn around. In 10 years, that's a long time. A market, the economy of a specific market could turn around completely within a 10-year period. Say like an Amazon comes in and now they need more warehouse, or an Amazon leaves and now they need less warehouse space. So it makes sense. 10 years, the lease being that long could definitely be a detriment and a benefit, depending on how you look at it.
Yeah, and that's a great way of describing it. I think that as in real estate investors, we have to be optimistic to some extent. Otherwise, we just wouldn't get into deals. Like I think that there's always reasons to talk yourself out of doing a deal. Like right now, we could point to probably 5 different things happening in the world that we could say, okay, well, we're just not going to proceed because of these reasons. So I think as a real estate investor, we have to be natural optimists and just say, well, if all this happens, then this is going to be a great project. And that's good. Like I think that's what causes us to take action. But that also needs to be balanced by saying, well, what happens if everything goes wrong? Then what? And if you're comfortable with that risk reward situation, then I think industrial real estate is an awesome one. But there's a lot of investors that just want to go and earn a 12 or a 15% return annualized over a certain period of time. And industrial can certainly do that, but it can also go the other way, probably more so than other asset classes like multifamily, which, like you said, it's if you have a multifamily property, you're going to find tenants for it. Provided that the economy or the market as a whole isn't shit, then you're going to find tenants for it. Whereas that's not the same in industrial. So it's balancing that risk reward.
Yep, that makes sense. Cool. Well, you sold me. I know there's risk, but I like the asset class. Let's talk a little bit about the future of industrial. I know there's been a lot of talk about there being a bright future for it in terms of their needing more space for the last mile warehouses and all that kind of stuff. So what do you see in terms of the future of industrial? What markets do you think are super strong for industrial?
It's interesting actually, because the past 2 years have been insane from the standpoint of how much demand there is for industrial space, more specifically for warehouse space, a subsection of industrial. And that's driven largely by the pandemic that we went through, where stores were physically closed,
buying stuff on Amazon.
Everybody's buying on. And Amazon took on a considerable amount of space, and not just Amazon, but all retailers, as they're trying to control their supply chain. Third-party logistics took on a ton of space. It's gone to the point actually that some ultra hot markets, like Vancouver as an example, is sub 1%. As you go into LA and New York's other port cities, they're sub 2%. And when you get into a market that's sub 2%, when like really a good healthy market's probably somewhere.
Are you talking? And you're talking cap rate, right, for sub?
For vacancy rate, sorry.
Vacancy, gotcha.
Yeah,
okay.
Sub.
I was gonna say sub 1%. Jesus, who's buying that?
Well, you know what? That wouldn't actually surprise me in some of those markets either. Like it's irrational at how crazy it's gotten. Sorry, vacancy rates. So okay. sub 2% vacancy rates for like these really hot markets, and even like inland markets, it's still still sub 3-4%. So it's a really hot market. I suspect that we might see a little bit of a tapering off on that for just a number of reasons. That's like we could always point to all these risks where it could prohibit an investor from making a decision. I think all those factors are going to cool that market off a little bit, but it's still so hot and there's still so little inventory to meet the demand that it will take something cataclysmic to really derail it. So I still think that there's going to be a lot of demand for industrial real estate as hopefully the market and the economy just stabilizes a bit and we don't have all these volatility factors in there. But there's a healthy amount of demand for it. I don't think e-commerce is going to change. I still think that it's going to continue eroding that market share of the money that's spent in retail. And just as the economy grows and population grows, we're going to need more storage space. So I'm still bullish long-term on industrial. I don't know what happens in the next year or two with interest rates and inflation and wars and you name
all the things,
all those things. I don't know what happens in the next year or two, but I am still very bullish long-term on industrial.
Perfect, man. That is good to hear. So we're nearing the end of our conversation point. So I do have to push us into the quick question round. Before we do that though, for people who, you sold them, they want to get into industrial, what are the first few steps they should take, to take steps towards buying their first property?
Yeah, a few things I'd say. First is commit to learning everything you can about the industry. So just everything from the nuts and bolts to what tenants want in a warehouse space to construction, architecture, engineering, everything you can learn about the asset, because it's not familiar to most of us. So you really have to start at like grade one on that. And then combine that with studying your local market. So drive industrial areas, read research reports that major brokerage companies or appraisal firms put out. Start really understanding cap rates, vacancy rates, who's in the market, what lease rates are, what the trends are. Start really engrossing yourself in that process of becoming an expert in industrial real estate in your local market. And then ideally find somebody that you can partner up with that has experience in that field. So if there's an investor in your market that's looking to do another project, perhaps you could be the capital, they could be the knowledge. I think if you combine all those things about committing to be an expert in that field, finding somebody that can help guide you through that process, I think you're significantly increasing your chances of success.
That is great advice, and I would definitely echo that. Find somebody who has done it before, partner up with them, and that is a recipe for success right there for sure. All right, well, that concludes it for us. We have gone through our 15-minute point period, so we need to jump into the quick question round. Are you ready?
Yeah, let's give her.
Let's do it. Starts with books or any form of education. Give me 2 recommendations, one for general life wisdom and one for real estate specific.
Yeah, the life wisdom, one that I'm reading right now is from Ray Dalio. It's so he's written a couple of books. His most recent one is New World Order, I believe. Yep. Just talking about how U.S. North America as a whole is starting to lose its competitiveness, and we're under threat of even losing like superpower status. And I'm in Canada, but we still ride the coattails of what the U.S. is. So if the U.S. were to not be a superpower in the future, that would affect all of North America. And it just talked about how the process of how in history there's always these superpowers that came, rose in prominence, and then they fell off, and kind of gives a little bit of ideas on what we could be doing to prevent that. But I just found that to be a really fascinating book. And a real estate one that actually is top of mind right now. I recommended it to a friend of mine the other day, and I pulled it out. I haven't started rereading it. I've actually read it twice, so this would be the third time that I've reread it. It's called To Be or Not to Be Intimidated, written by a guy named Robert Ringer. And it's older. It's an older book, but it's a fascinating account of how this guy treated real estate. He flew around in private jets. Some of the proposals and presentations he put together are fascinating, and it's just a really interesting story that this guy tells. So I've read it twice for a reason. It's a really interesting tale. So those would be the 2. One's new, one's old.
Perfect. I love it. To be or not to be intimidated. I will have to check that one out.
Yeah, it's a terrible title. I don't know.
Yeah. Well, it's like advice. That the Dale Carnegie, the How to Win Friends, Influence People. I hate the title. The book is awesome.
I agree with you completely on that. That is a world-class book, but the title sucks.
Yeah.
So same with this one. Maybe that was a formula. Maybe they're like, let's come up with a really crappy title and it'll sell books.
There you go. All right. So To Be or Not to Be Intimidated. And then Ray Dalio's newest book about, I think you're right. I think it is the New World Order.
I think that's what it is. Yeah.
That's super interesting. I always, there are people in America who are just like, oh, America, we're number one. But I always, I'm really interested by like the Roman Empire collapse because, your countries, they rise, they fall. It doesn't matter where you are in the pecking order. You can always go down. So I'm sure I will have to pick that book up and give it a read.
Yeah, it's a very good book.
That moves us to the next question. And this one is for your younger self. So if you could go to the Chad who was just doing those first few flips with your buddies back in your early 20s, go back to him, look him in the eye, give him one piece of advice moving forward.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Save money, save more money. I think that'd be the best thing I could say is that money gives you a lot of power as a real estate investor. And you can always try to raise money from other investors and do like the syndicate model. But having more money on your own is so powerful because you can front load a deal yourself and bring investors in later. You've got the ability to be more convincing. If you put your money in on a deal, that makes it a lot more appealing to other investors that you're physically invested in it. So that's what I would have said is save more money. Don't spend that $100 at the bar trying to impress girls. Don't buy the newest car. Don't spend money on that. Save money. That's what I would say.
Yep. Yeah, I've never been a really big spender, but I am kicking myself. I'm at that point in my investing career where I'm kind of kicking myself for putting so much money into deals that I've been doing. I wish I had raised more money because it is so valuable to have that money in your bank account. Yep. Just to be able to show people, sellers, say, hey man, I got money. It's amazing how far that goes just to be able to show a screenshot of a bank account to show them, you have the capital to close and you don't have to raise it yourself.
Yeah, having money and a high credit score are the two most powerful things you can have as a real estate investor.
Yep. All right, and that moves us to the next question. This is an opportunity for you to brag a little bit because we are all gifted with strengths. You are no exception. We are all put on this earth with something that we specifically can gift to the earth. And so what is your Superman strength? What are you exceptional at?
I would say I'm exceptional at embracing being weird and awkward. And that probably sounds weird and awkward just saying that, but I don't hold myself with this super high esteem or have this big ego. I have no problem walking into a business and just walking in cold and introducing myself. I have no problem doing an interview like this. In fact, I love doing these interviews because I just love talking to like-minded people. Whereas I think that's an anomaly. A lot of people are really uncomfortable doing some of these things that put themselves in a position where they might embarrass themselves or come across as weird or awkward. I like lean into that weird or awkward stage where I can embarrass myself. And while that might seem strange in itself, I think that's helped me a lot. Is that ability to take no or be rejected or risk being embarrassed and just brush it off. I think that in itself is kind of like an awkward superpower. I don't think anyone will make a movie about me. I don't think I'll be the next superhero. I don't think that'd make a good costume and screenplay. But yeah, that's what I'd say.
Bill, I love it. You're the first guest who's mentioned that, but I definitely see the value in that. Just being able to sit in those moments that are, uncomfortable and just say, "Hey, man, I don't care. I'm here. I'm showing up, and so let's do this."
Yep.
That moves us to the second to last question, and this is about I usually say the United States here, but you're in Canada, so I'm going to say the world. It's a big place. There's a lot of square miles out there to put your hard-earned money. So what is your favorite metro that's not your backyard? What metro are you most excited about?
I like Texas. I have actually looked at a few properties recently in Texas for a number of reasons. I think that they're going to have a lot of net immigration. An economy is so closely correlated with population growth. Yeah. So I think they're going to have a ton of population growth. I think there's some factors at play that we don't necessarily need to get into a whole lot, but there's a merger between CP and Kansas City Southern, big rail acquisition, which is going to be the first single line rail network connecting Canada, the US, and Mexico. And that's going to take a lot of traffic. Yeah, it's going to be a game changer. It's still with the Surface Transportation Board for approval, but the acquisition's technically already happened. But that's going to take a lot of that port traffic that's going to California and New York, and the super high warehouse prices. That's going to divert a lot of that traffic to southern ports. There's one in particular, Corpus Christi in Texas, which is kind of like a tourist town, but it's also a major port. That's going to be right on that main line. So I'm quite interested in Corpus Christi. That's one that's kind of a sleeper in my mind. Could be a hunch. Like, there's any number of factors. Last thing I want to do is to say go do Corpus Christi, because there's still a lot of things that have to happen with that merger. But that's one in particular. Corpus Christi is one I'm very interested in.
Cool, man. No, I've been bullish on Texas for a bit. Last year I bought 3 self-storage facilities out there, outside of Dallas and in Lubbock, and I'm a big fan. Texas is everything's looking good out there. All right, and that leads us to the very last question. You have given a lot of good advice on industrial. So first, I want to say thank you for hopping on and sharing everything with us. The last question, though, is I'm sure people want to reach out. So what is the best way for somebody to reach out and get in contact with you?
Yeah, I'm active on LinkedIn, and I have a YouTube channel. So I've got quite a few videos that I've done. As I mentioned to you before, we were chatting, I don't even mention what company I work for or what city I live in. I just really want it to be a standalone product where I'm trying to add value to people that want to learn more about it. So you can just, it's Chad Griffiths CRE is the channel name, or email is always great too, griffithscre@gmail.com. I always try to answer emails within a day or two, but depending on how busy I am, it might be stretched a little bit, but I always try to answer emails or connect on LinkedIn would all be great.
Cool. All right. I will put those links in the show notes. So if anybody wants to reach out to Chad, just click the little more in the description. It'll pop down the full description in there. You can find URLs, reach out and say hi to Chad. So that's it, Chad. Thank you again very much for hopping on. It's been a pleasure having you here and having this conversation.
Yeah. Thanks again so much, Gabe. We really appreciate being on here.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value.
And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.